Hello, and welcome to the Freddie Mac Connect Next Stop on the Valuation Modernization Roadmap session. All lines are in listen-only mode. This session is being recorded and will be available following the conference. If you have any questions, please use the Q&A icon at the bottom of your screen. If you have any technical issues, please use the Q&A box as well, and someone will assist you. Lastly, using the handouts icon, you will find links to speaker bios and the presentation deck. With that, I will turn it over to Danny Wiley, Senior Director of Collateral Risk Policy with Freddie Mac. Danny, the floor is yours.
Thanks, Amani, and thanks to all of you for joining us today. As Amani said, I'm Danny Wiley. I'm the Senior Director in Collateral here at Freddie Mac. And joining me to help talk through the issues today will be our Residential Chief Appraiser, Scott Roeder, and Daniel Miller, who works as a Director, helping us with technology and integration with vendors and clients. For the last few years, we've been on quite a journey trying to change and modernize the valuation process. And in our time together today, we're going to talk about where we are on that journey. We'll reach back 4 or 5 years and talk about some of the things that we've done, some of the things we've done more recently, and some of the things that lie ahead. Scott?
Okay. Thank you, Danny. I would say innovating and modernizing anything doesn't happen in a vacuum, and it's as true as ever in the valuation space. It takes collaborative effort across the industry, and as this slide says, we really need and do work together to test and learn and implement new ways of doing things. Emerging tools and technology clearly help, and they help us on our overall goal of streamlining the process in the current environment, helping us identify and remove bias, while at the same time continuing to inform and ensuring we effectively manage risk. This slide really highlights a number of the whys behind modernization. Our why really starts in many ways with ensuring that we're looking to and continuing to work on ways we can more effectively assess collateral as part of the mortgage transaction to help simplify the loan manufacturing process. This includes a variety of things that, top of the list, reducing borrower costs, at the same time ensuring fair and consistent valuation outcomes, again, along the way ensuring we effectively manage risk. My friend Daniel Miller, I think, Dan, if you want to come in, he'll cover some of the transition to some of the challenges we're seeing and how emerging tools and technology can help.
Sure. Thanks, Scott. Yeah, I mean, one of the main issues that we've seen, especially a few years ago when volume was really high, is with appraisal capacity. So in any market, we can have challenges with appraiser capacity, but when the market's heavy, when a new refi boom comes in the coming markets, appraiser capacity can just be exacerbated and have concerns. So there are ways to standardize the process, make it consistent, use technology that's really been out there for years, maybe not used as much in our space traditionally, but in other spaces in the mortgage ecosystem. There are technologies to create floor plans, for instance, to help inspect a property or help gather objective facts about the property. And using some of those techniques, we can help really boost what folks are able to do and be more consistent about the process when we have someone in a home. So I'm gonna go ahead and flip to the next slide here, and we'll go to the spectrum of collateral options. Okay, speaking of the options, so we really look at it as a spectrum of options. So we start with the appraisal waiver. Appraisal waiver is our ACE waiver, our automated collateral evaluation. And that automated collateral evaluation is using our models to determine when we can offer the ability to not need an appraisal. So it's something that you'll want to make sure that you know how to look at the right messages to understand when am I eligible to receive an appraisal waiver, how to accept the appraisal waiver. Make sure that you and your teams know how to make sure that you're leveraging these options. Another option that we have on our spectrum is also without an appraisal. It's called ACE plus PDR, and it leverages our automated collateral evaluation plus a property data report. And those property data reports are a report done by a trained data collector at the property, oftentimes using technology that helps augment their process, may help them create the floor plan using a very standardized application that helps them and assists them to do that process. It goes through and walks them through how to collect the right objective property characteristics about the property, and then submits it back to the appraisal management company or to a lender to do a review of that information and make sure that that property meets our standards for eligibility and also for condition. And so we really would encourage that you look at both ACE and ACE plus PDR. And I want to highlight also the benefit with ACE, that it using our digital solutions will improve the defect rate or may improve the defect rate as much as 1.7% related to ACE compared to those lenders originating loans that are not using our digital solutions. So it's really something key to focus on. And I want to flip it back to Scott, who will cover some of the additional valuation options using appraisers.
Thank you, Daniel. You know, it's funny, I look at this spectrum and I remember, as I know Daniel and Danny do as well, this spectrum for a long time was anchored on each side with nothing in the middle. We actually had an early version of this slide that we were building out the gray space in the middle. And it's exciting because we're really taking a lot of big, important, meaningful steps in doing that. Daniel covered the ones on the left, really, that are more innovation driven and don't necessarily require an appraiser. ACE waiver doesn't require an appraiser at all. ACE PDR only in certain upgrade scenarios. And then in the light blue shaded area, we've announced, both GSEs announced a desktop appraisal. So it's an appraisal that to the term, appraiser can actually sit in their office at their desktop, consume the information with all the requisite requirements and having the competency, and there's a variety of things behind being able to do this. But again, a nice option when you've got a lot of information available, you can provide to the appraiser, gain some efficiency there. We collaborated with our friends at Fannie Mae under the direction of our regulator and created both hybrid and desktop forms. So we have hybrid currently in use as an upgrade scenario, as I mentioned, in certain ACE PDR scenarios, and we have it confidently on the spectrum here, as I would say, likely offering short to come. And on the far right is the traditional appraisal, the full interior, exterior traditional appraisal. And we talk a lot to appraisers, and appraisers of a certain age tend to worry that a lot of appraisal options are going away and appraisers aren't going to be needed. And a lot of times we pull up this slide and we just say, look, 3 of the 5, actually 4 of the 5, if you include the upgrade scenario for ACE PDR, include appraisers. We're absolutely going to continue to need appraisers. They need to get the message. We appraisers need to get the message that we're just going to be doing a fair amount of our work very differently going forward. And Daniel spent some time and covered ACE plus PDR, and I'm going to kind of share this slide with him, tee up some of the reasons behind ACE PDR and really evidence that Freddie Mac is serious about and committed to innovation. ACE PDR, I think we were first leaning into the concept of inspection-informed waiver, and first to innovate in this space. And we have recently expanded our eligibility to include purchase transactions. We've added and kind of put some more teeth in, if you will, the requirements around the property data collectors, what we require, including a new element of some customer service training. These are folks that are going to be in the homes, so we want to ensure that the oversight on them includes some level of minimal customer service training. We've also updated the background check requirements. So a lot of those details you can find on our website, and I know we've got some links at the end of this presentation, but that's very exciting. I'll bring my friend Daniel back in again to cover the UDP, which is the uniform, or the UPD, the Uniform Property Data Set. Also a collaboration with Fannie Mae on aligning some of the data set and data standard on what's collected when you're inside of a home. So Daniel, actually turn it back to you if you don't mind and cover that and the base API.
Sure, great. Thanks, Scott. Yeah, we, as Scott mentioned, we did a lot of work over the last 9 months or so to align with the other GSC and create the Uniform Property Data Set. A lot of that work was based on lender feedback, and we want to make sure that we are continually using that feedback to enhance our process and making the experience better for you and others in the industry. So, as Scott mentioned, we did roll that data set out a few months ago. And then as of December 1st, that data set will be available for use. So over the last few months and the coming month, there will be a lot of industry players that are working to update and enhance their mobile technology that's helping to collect the data at the property to make sure it's in conformity with the Uniform Property Data Set. And along with that, there is an updated API or beyond ACE or beyond automated collateral evaluation API is out there and available. Will be updated to support the Uniform Property Data Set. It's available for all lenders today. And as of December 1st, will be enhanced to support that new Uniform Property Data Set. So we're really looking forward to continually seeing additional lenders not only leverage ACE plus PDR and get the benefits of cost, of some turn time, but also leverage the messaging feedback that comes from our API. So there are really some great insights that you can use in your review process using our API to help inform that process on your end. So as of April 1st, another key date is to know that on April 1st, you'll be required to submit all of the property data reports to our base API in order to leverage that feedback. So as part of normal requirements that you might see in the appraisal space, for example, where every appraisal must be submitted to UCDP, we'll have a similar requirement for ACE plus PDR, where all the property data reports will need to be submitted in that new UPD format for loans and for applications for loans on or after April 1st. Okay, so speaking of working together with the other GSC and aligning for the future, as we did with the Uniform Property Data Set, we've done a lot of work in a multi-year effort for the Uniform Appraisal Data Set. So I'd like to turn it over to Danny to really go over the Uniform Appraisal Data Set and some of what we're doing with redesign.
Thanks, Daniel. Really exciting to hear you and Scott talk about the way we're filling in those gaps in the appraisal spectrum and the things that we've done recently. I think the adoption of that uniform property data set for the PDR process is a huge thing. It's going to eliminate a lot of the road bumps and friction that our lenders have experienced in the PDR process. But as Scott pointed out, the appraisal report itself will continue to play an important role in our evaluation of collateral. And we have been working jointly with our friends at Fannie Mae since 2018 to redesign the basic way appraisals are reported. And it says right on the screen, the headline, no more individual forms. That's a huge transition. I've been in this business a few decades now, and since day one, this is how appraisals were ordered and how they were reported. Forms and form numbers have driven a lot of the process. Currently, we have about a dozen different appraisal report forms that we use. And the form that is used depends on the property type and the scope of work, and it can be a real hodgepodge. It can also create some complications, and I'm sure every lender or any appraiser who's on this call has run into the case where you appraise the property on a condo form and it turns out it's not really a condo. And so then the report has to be totally re-prepared from the ground up, basically. We need an entirely new report. We addressed some of the consistency in reporting about a decade ago when we introduced the original UAD, which is live and we're using it now. But the current UAD only applies to a subset of those dozen forms. And it really only applies to single family and condo properties. And with the new UAD, we're having a fundamental shift in the way the information is going to be gathered and reported. Rather than having this baker's dozen set of forms that are property specific, there will be one universal data set. And as the appraiser starts to collect information, as they start to prepare the report, they will be working with that same basic data set, regardless of the property type and regardless of the scope of work. And as the information gets fed into the data set, then those elements that the appraiser completes will vary based on the property type. For example, if the appraiser is working on a single family property, then the data fields related to the condo project simply won't appear. On the other hand, if the appraiser indicates that the property is a condo, then the data that's related to the condo project would appear and then subsequently become part of the report output. So we're going to fundamentally change the way we're collecting and preparing the report. And we're also fundamentally changing and, quite frankly, modernizing the report output itself. Today, honestly, the appraisal reports still reflect typewriter technology. Have you ever wondered, why are the comp pictures and all the subject pictures and the maps, why are they added as addenda at the end of the report? And quite frankly, the answer is because back in the old days when we were typing appraisal reports, that's what you did. You typed the report and then you put the pictures at the end as an addenda. In the new UAD, the output, and I'm trying to be very careful not to call it a form, it is an output now. It is a report, not a form. But the new output will be structured in a more efficient manner. Where should the comp pictures actually be? So rather than flipping to the back of the report, wouldn't it be better to have the comp picture right at the top of the adjustment grid, right over in the report? So we're moving the photos from the addenda. We're making all of the text boxes expandable. So you shouldn't have to read through a report and say, see addenda, and then search through 30 pages to find the paragraph in the addenda that applies to the place that you're looking for in the report now. So we're adding a lot more logical structure to the output itself. It should be far easier to read. In fact, we've done some user experience testing on this, and it was really just unanimous that it is much easier to use and work with the output of the new UAD. So we're really excited about that. As far as our actual timeline, you can find this timeline on the UAD section of our website or on the Fannie Mae website. It goes back to the original 2018. And you can see from the timeline that we released the specs earlier this year. And then basically we're spending this year and next year with the technology providers building all the supporting technology that has to go into making such a fundamental change. And then we will roll out in limited production in 2025. I will say, I do suggest to you that you go to the website, you look at this timeline. It does get updated from time to time. And as we get closer to certain key milestone dates, we do add more detail to the timeline. So it's a good thing to have, to go find it, to bookmark it, and to kind of look at it from time to time so that you can keep up on the proposed timelines. Clearly, when you make such a big fundamental change, it affects everybody in the process. It's going to affect us as GSEs, it's going to affect the lenders, it's going to affect the appraisers. And so I'm going to turn it back over to Daniel now to walk through some of those considerations that you need to be thinking about with regard to the new UAD.
Great, thanks, Danny. As we talk about some of the considerations for implementation of UAD, as Danny mentioned, there's no forms anymore, so there's just one uniform appraisal report. And so as we only have one output, as Danny said, I shouldn't use the word report, but as we only have one output, there's a number of considerations in terms of those form numbers being used for many, many years to drive things such as fees for appraisers. That it's also fees that get disclosed. So on your loan estimate, on the consumer disclosure statement, all of those statements, they're using fees tied to form numbers. So you'll want to consider, now that there's no form numbers, How are you going to disclose the right fee? Work with your appraisal management companies. Work with the appraisal technology firms that you're working with. Work with your fee disclosure companies to understand how are they going to continue to give you fees that you disclose that will work with the new uniform appraisal data set and the new concept of not being tied to those legacy form numbers. Beyond just fees, whether it's reasonable and customary fees for appraisers or fees that you disclose, there's also the implementation of the ordering process with your third parties. So whether it's appraisal management companies or various portals or other providers that are helping you procure and manage and review your appraisals, you'll need to work with them to make sure that you can order the right product, that you get back the right product, that you know how to review the product that you receive. And so all of that takes a little bit of time to look at your process, understand it. We've put out a playbook of a lot of the items that you might want to consider as you work with your various business partners. So you really use this as an opportunity to highlight that it's not just an updated data set. There are a lot of operational concerns you want to think about. You want to start picking apart the pieces with your process and making sure that it will be a smoothless transition for you and for others as you work to obtain and review your appraisals. And next up is our text detection. So I'm going to turn it over to Scott to go through the next section.
Thank you, Daniel. I knew we'd get here. Text detection. I could talk for the whole session on this. All three of us really actively engage with the industry, and I would say amongst our clients, lenders, vendors, appraisers, appraisal management companies, the whole breadth of folks that that are important that we talk to. It may not be the number one thing, but it's at the top of the list in terms of what's on people's mind in terms of text detection. So this side is stop or go, text detection, words, unacceptable appraisal practice. It's really grounded in our published policy. In a general sense, words matter in life in general, and it's as true as ever in the valuation space. And our policy calls out two important elements. 5603.4 is the section calling out a couple things: the development of a valuation conclusion that makes any reference to protected class is prohibited. Also prohibited is use of any subjective terminology and phrases in a report. On this slide, we highlight some of the key takeaways as it relates to text detection. And I guess the first thing I'd like to say is the monitoring and the work that the hard work that the broader team's doing is ongoing. And I think that's evidenced on the left there. That's probably the most meaningful thing is in terms of impact to our lender client partners and the many AMCs and appraisal management companies and staffs that we interact with is, okay, what's this mean to us? So right now, you're likely aware we're returning warning messages on many of the words and phrases. And that little inset box has a date of January 26, 2024. That was originally an October 23 date. And I think to the credit of Freddie Mac listening, and again, evidencing the fact that this is an ongoing activity, that was bumped to ensure we were really going to reduce the false messaging that may have gotten tripped on a word. As an example, the word desirable comes up a lot. We appraisers love the word desirable. And instead of, as an example, having that fire in an absolute sense every time it was in a report, we began to actually expand and contextualize uses of desirable to then actually reduce the firing. So if an appraiser talks about desirable interest rates, that's okay. If they talk about desirable location, desirable area, any other subjective use of the word desirable, that will be a trigger as an example. So what do you do as a lender from a practical standpoint? Really, you react to the messaging no different than any other messaging. It's feedback. You're going to get a fatal severity message in LCA and you can react. And the messages are really intended to assist lenders with compliance to the guide, not to torture broadly anybody outside of Freddie Mac, but really to try to be that partner to help identify that. And as we get out and talk to the industry, I think some best practices that lenders and our clients can undertake are, kind of grounding yourself in some of that understanding why words should be avoided. That's been a through line to a lot of our messaging directly to appraisers, is to try to kind of turn that corner with less subjective, more objective, less opinion, more fact, and then have them review those messages and have you review messages that may trigger with the appraisers. It can be a great opportunity to interact with and message to your appraisers and your appraisers on your panel. This slide just kind of reinforces this. I'll actually share this with Danny in a second. But again, we've been out with appraisers. We get asked, number one, typically out the gate, are we going to publish a list? I don't know that we're contemplating publishing a list. It's for a lot of reasons. A lot of the directional messaging is really to get appraisers to think very differently. And we've really worked hard to bring some resources and continue to bring some resources to the industry by way of not only webinars, podcasts, articles, Q&As, to be able to share just ongoing messaging around it and examples. Like the top one here is, if you contextualize the use of Spanish and it's a Spanish style home, perfectly fine. If you're using Spanish as a reference to ethnicity in a report, that's not okay. So, Danny, I'm sure I'm missing a couple things. Have anything you want to add?
Well, first, I would say thank you to all of you in this session, because it's been very clear to me that the feedback messages we've been providing, people have been listening. As we've made our most recent tweaks and as I monitor the results, we're seeing a very, very high percentage of reports now with no problems whatsoever. Well over 95% of the reports don't flag a message of any kind, and only a very, very small percentage of reports are having words that are just overtly unacceptable in them. So it's working, and it's working in large part thanks to you. You're taking the feedback that we're providing and flipping it over to the appraisers, and there's a great education effort going on. And we are seeing progress in getting reports in that just have more objective terminology, and people are not talking about being convenient to something or something being within walking distance, but they are transitioning over to giving us that factual data, telling us that it's a quarter of a mile away rather than saying that it's convenient or within walking distance. So we will continue to monitor this, and it was something we will monitor on an ongoing basis and periodically tweak. And certainly if you have feedback, we would certainly appreciate you sharing that with us. I'd like to wrap up our session by looking at the future evaluation and some of the exciting things that we're sort of playing with, and I would invite everybody to join me in this discussion. But when we look at the technology that's out there today and the things that we could use to evaluate collateral, there's some real exciting opportunities that lie ahead for us. Daniel has mentioned, and I think Scott did too, the scanning technology that's out there. That's I'd say it's not quite in its infancy, but it is maturing, and it's getting better day by day. And it's really amazing. We've gone from having to have very specialized, very expensive equipment to now having scanning technology that can work using someone's the mobile device that they carry around with them every day, and not having to spend thousands of dollars to get specialized equipment to scan a home. We're really looking hard at the application of computer vision and NLP to say, what can we do rather than having human eyeballs looking at photographs or having humans read the full content of the report? How can we leverage the power of these kinds of technologies to better assist us in evaluating appraisal reports and to give better feedback to you, the lenders, from potential condition issues, for example, or even better guidance on potential text in appraisals. Scott, Daniel, anything you want to add on this?
No, I think you hit the nail on the head, Danny, for me, and then I'll hand it to Daniel. Yeah, I get excited, even though I'm of a certain age, as I've called out many of my fellow appraisers. I get excited with the emerging tools and technology and how they can be leveraged along the way. And I think you're right, Danny. Some of these, I'm a baseball fan, so we use a baseball analogy. Some of these are kind of an early first or second inning, and I don't think that's bad. I think it's a way that we can begin to continue to watch the trajectory and the use of these. And again, to me, everything ties back to the strategy and the goal of trying to simplify the process, reduce costs in a fair and reasonable and equitable way, how we can manage risk, and then drive a consistent and fair outcome and provide options to the industry. So all these are potential points of connection to really help advantage and leverage that efficiency. Daniel?
Totally agree, Scott and Danny. I mean, it's been a long time that the most recent innovation in the appraisal space was the use of digital cameras. So there's a lot of new tools and techniques out there today. We want to make sure that we enable them, we allow appraisers and lenders to benefit from them, and so it's really exciting to see some of the developments. So I also want to flip it over to our next slide, which has some resources, and I'll flip it back to Scott to cover that.
Thank you, Daniel. Next to the, I would say thank you, Daniel. I would say next to the capacity and volume slide, which was not a part of this, but it's a favorite slide. This is important. You can scan the QR code. You can go to freddiemac.com/appraisers. We have an appraiser webpage that we've really built out over the last number of years. Residing there in the middle, you see the appraiser capacity and volume that we track and update monthly. We have a heat map, state-by-state view of appraisals per appraiser for a hard count of just the work per unique appraiser license that we see coming into the national portal. We house our articles, FAQs, Q&As, and a variety of other resources there. So anyway, a way to say, kindly use that as a resource and direct your attention there for anything you may need.
All right, that is all the time we have for today. We will reach out to you following the conference if you submitted a question. However, your opinion is important. Please take a few moments to take our brief survey so that we can continue to bring you timely and relevant content. Furthermore, the presentation deck will be sent to you following the session. You can also log in anytime after the conference to play back this or any other session. Thank you and enjoy the rest of the conference.